welcome to Weekly Economic Insights, your weekly dose of events and news that you need to know to manage your personal finances. I am Ridhima Bhatnagar. Let's begin with all the stock market action. Let's begin with the Indian stock market action. The Nifty 50 was down 470.2 points, almost 2.09% compared to last week. It closed at 22,023.35. Sensex was down 1,475.96 points, about 1.99%. Compared to last week, it closed at 72,643.43. The Nifty Mid-Cap 100 Index was down by 2,280.55 points, about 4.65% compared to last week. The Nifty Small Cap 100 Index was down by 862.3 points, about 5.48% compared to last week. The index fell adversely on Wednesday after Madhabi Puri pointed out the presence of pockets of froth in the mid-cap and small-cap stocks and asked investors to be careful of the froth that is developing in the market. Now, the SEBI has also directed AMCs to put out stress test reports for mid-cap as well as small-cap funds. Now, let's talk about some key data. We got the data of the Index of Industrial Production or IIP for the month of January 2024. The quick estimates of the Index of Industrial Production for the month of January stood at 153. A growth of 3.8% has been estimated for Jan 2024 and growth for the period of April to Jan 23-24 is 5.9%. Now let's talk about the CPI or the Consumer Price Index for the month of February 2024. Now the provisional CPI or the Consumer Price Index inflation rate for the month of February stood at 5.09%, whereas the CFPI or the Consumer Food Price Index inflation rate was 8.66%. Next is the Wholesale Price Index or the WPI for the month of February 2024. The annual inflation rate for WPI is 0.20% for the month of February 2024. This positive rate of inflation is primarily due to the increase in prices of food articles, crude petroleum, natural gas, electricity, machinery and equipment, motor vehicles, trailers, and even semi-trailers. Now, on to some of the big news. Reports have suggested that foreign investors have injected over $4 billion into India's real estate. As per a report recently released by Colliers, India is among the world's fastest growing economies and a top choice in the APAC region, offering attractive pricing, better valuations, and higher yields. Key highlights from the report tell us, in 2023, foreign inflows increased by 20% on a year-on-year basis to $3.6 billion. Investor interest in India is expected to stay robust as the focus remains on income-generating office properties, but residential, industrial, and alternative assets are also gaining traction. Let's talk about another key report now. The Association of Mutual Funds in India, AMFI, reported that the share of women in the industry assets, that is mutual funds, has increased to 21% as of December 2023 from 15% in March 2017. Goa has the highest share of women in the mutual fund industry at 40%, followed by the northeastern states, and Chandigarh, Maharashtra, and New Delhi has also over 30% share. Now, let's talk about the big movers and shakers of this week. Let's begin with all that is happening at Byju's. Now, Byju's has shut down all its offices across India, retaining only its headquarters in Bengaluru. This is in response to the cost-saving effort to address an upcoming liquidity challenge. It has also asked its employees to work from home for an undefined period of time. Additionally, the company has also withheld a portion of the February salary for almost 75% of its employees. The SEBI chief has also raised concerns over manipulation of small and and middle enterprises. Now, the SEBI chairperson discussed in a press conference the challenges faced in the SME segment due to potential manipulation and need for enhanced regulatory measures. So, what are the concerns that have been raised? SEBI aimed to create a facilitative listing environment for SMEs, recognizing their difficulties in complying with rigorous regulations similar to those of the main board. However, feedback suggested certain entities are exploiting this framework. SEBI implemented surveillance measures like ASM, additional surveillance measure, and GSM, graded surveillance measure, to mitigate the risk of price manipulation in the SME segment. Recognized the ease of manipulating prices at both IPO and trading levels due to the relatively small market cap and free float of SMEs. Moving on, the India-European Free Trade Association signed a trade and economic partnership agreement. Now, India has been working on a trade and economic partnership agreement with EFTA countries comprising Switzerland, Iceland, Norway, and others. The Union Cabinet, chaired by the Honorable Prime Minister, has approved signing of the TAPA with the EFTA states. EFTA is an intergovernmental organization set up in the 1960s for the promotion of free trade and economic integration for the benefit of its 4 member states. Now, this agreement will benefit India. It will enhance the Make in India initiative, offer opportunities for young and talented workforce, create a gateway for Indian exporters to tap into large European and global markets. Let's bring you some other key highlights. The EFTA is committed to promoting investments to raise India's FDI stock by $100 billion over the next 15 years. It is also going to encourage the creation of 1 million direct jobs in India. Through this investment, the investment will not include foreign portfolio investment. Also, access to 92.2% of its tariff lines, which covers 99.6% of India's exports. Let's now talk about news from the central bank. RBI can now import gold without paying tax. The government of India has recently made a significant policy change that allows the RBI to import gold without incurring import taxes, simplifying the process for the central bank. This move eliminates the need for RBI to pay both the agriculture infrastructure and development cess and basic custom charges on gold imports, making a notable shift in India's gold trade environment. And lastly, as per India ratings, India is expected to transition into an upper middle income economy between fiscal years 2033 and 36 and could reach a $15 trillion economy by fiscal years 2043 to 47. The World Bank classifies lower middle income countries as those with per capita income between $1,000 and $4,000 and upper middle income countries as those with per capita income between $4,000 and $12,000. Now, until 2006, India was classified by the World Bank as a low-income nation. Since 2007, it has moved to the lower middle income category. As of 2022, India's per capita GDP was $2,390. Well, with this, we've reached the end of this video. Do not forget to like and share this video. One Finance will bring you every week the top news and updates that impact your personal finances. Do follow One Finance.